welcome to Small Business, where we take a closer look at some of the challenges facing small business owners, as well as emerging opportunities, ways to do business better, and of course, we'll shine a spotlight on small business owners finding success. First up on today's show, though, working capital and cash flow, crucial parts of success for every business, big or small. But most challenging pressures businesses face in this regard happen during the growth phases. Well, for more on how to manage these areas successfully, Brad Prout, CEO of First Class Capital, joins us now from our CBD studio. Brad, great to have your company today on the show. Firstly, just talk us through what First Class Capital are all about.
Yeah, good afternoon. Thanks for having me. First Class Capital is a provider of loans to small business. Small business, as you know, is such a crucial part of the economy in Australia, with over 2 or 2.2 million businesses operating in Australia. Those businesses, as you just said, at various stages of their growth have strong demands for working capital, and for various reasons those demands have been largely underserviced by the traditional banking markets. So First Class Capital is all about delivering working capital and solutions to those business owners.
So talk us through how working capital assists in small business productivity.
Yeah, well, many small businesses, whether it's in wholesaling or the service-related industry, they tend to have to provide trade credit to their customers. So at any moment in time, they tend to have a large number of invoices that remain unpaid. And that tends to be the biggest cause of working capital pressure to many small businesses. So accelerating the payment of cash flows and actually managing that working capital within the business is as important for most businesses as indeed achieving the sale is to begin with.
And do those needs tend to differ from growth to maturity in terms of the phase of a business?
Yeah, they do tend to. I mean, most small businesses grow through, by their definition, they tend to grow very rapidly. And so typically when they're growing rapidly, they tend to have a lot of need for reinvestment, be it in inventory, in their staff, or in other aspects of their business. And if a lot of their capital is tied up in unpaid invoices or in other areas of their business that they can't deploy, then they tend to be under pressure. And in many aspects of Australia, those pressures can bring our business unstuck, or it can slow its rate of growth.
So what sort of solutions do you provide?
So we have a range of loan products. We actually assist with accelerating the payment of customer invoices. We have products that assist with the payment of suppliers or trade creditors. We have retail business-oriented products that enable them to get access to capital against future credit or debit card sales. And we have sales-oriented financing solutions. So we have working capital which a small business owner can use at the point of sale to enable them to hopefully increase their sales.
Are you business to business only?
Yeah, we mainly focus on business to business, but we also have business to consumer products. What we do, we also supply with our products a range of supporting services, so the business owners can actually use the credit products in a way that will help them grow their business, namely in areas of credit risk management, so that small business owners can know who they're dealing with. They know who they're providing trade credit to, as well as assisting them with payment solutions so they can actually collect those payments in a timely manner. We find that those supporting services are just as important as the delivery of the funding itself.
What's been the impact on your business of structural changes in the economy going on, with digital moves to digital in the media space and retail, of course, going online? Has that sort of made necessary more working capital in a sort of maturity phase for small businesses, in your view?
Yeah, I think it has. I think the most notable trend in Australia in recent years, and I think this is going to continue, is the regulatory regime that the banks are facing and where they're prioritising the deployment of their capital. That unfortunately tends to be at the expense of the small business owner. We also find that small business owners are time poor, so it's very important to deliver funding and services to them in a way which suits them. So it very much depends on technology and having a national network of representation so that the business owner can get access to the funding when it suits them.
What sort of regulations do you have, or internal regulations do you have when you, for lending standards for when you give this working capital out to small businesses?
Yeah. So we obviously run a strict internal compliance regime and credit decisioning rules, but we tend to view business owners and look at the health of their business and the future opportunities for the business rather than necessarily a more stringent or strict property-based security decision-making. So unlike most lenders, First Class Capital actually does not require property security to secure its loan, which tends to suit many small businesses who for reasons of either sound financial planning or the affordability of the housing market, many small business owners actually don't own property, and that tends to be an impediment for them getting access to working capital from the banks.
Do you also see a link between demand for working capital and confidence in small business?
I think very much. I think once a small business owner knows that they've got timely cash flow coming into their business, they can make expansive decisions, I suppose, more easily. It's not knowing when a customer is going to pay, or if that customer is going to pay at all for services or goods that have already been supplied, that really can hamstring a business, and particularly the decision making of its owners.
In terms of interest rates, obviously they are likely to stay on hold for longer, but what will be the impact on your business when they inevitably do rise?
Well, I think I agree with you that they will inevitably rise. They're obviously in a very historical lows. As the economy improves and businesses become more confident with the reinvestment in their inventory, I believe profit margins will improve and the general health of the business will improve, and with that, hopefully, the ability to absorb what may be slightly higher interest rates.
All right, Brad, thank you so much for joining us on the show today. We'll have to leave it there.
Thanks for the opportunity. Bye.
Brad Prout there.